Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York. It is Thursday, 28th day of July, 2016, and this is the daily report for gold and silver. We have gold currently trading off about $3 on the day, $13.35 and change. This, of course, is spot that we're looking at. Low on the day has been $32.73 with a high of $13.45.56. Now, when we look at COMEX, price is a little bit different. Change is really different, but the net result is 1333.20, low 1330, and the high 1344. Of course, we did recommend initiating long positions yesterday in the market. It was a fast market. We put the call out. Market was trading roughly at 1332. You've gotten in somewhere in that area between, say, 32, maybe 34, 35, depending on when you actually took or put the trade on. And we are currently maintaining that long position along with our stop. Of course, we'll talk about that in more detail when we pull up our first chart. Lastly, silver, $20 and call it 20 cents. Really puts it down about 12 cents on the day. The high $20.51 and the low $20.10. So traders, absolutely no doubt an interesting day in the precious metals market, specifically gold. What I mean by interesting is as follows. Take a look at this daily candle in standard candlestick format. First, when we compare it to yesterday's trading activity, we have seen, in fact, a higher high on the day. High today, 1344.30. You can see that's not well, but it is above the prior high, which was here. Now, in terms of the low, here's our daily low for yesterday. Our daily low for today, it absolutely has a higher low. However, it did close lower than the open on the day, and that's why we've got that red candle. So, if in fact we are looking at a market that's going to find genuine support and move up, which I believe we are, I would have liked to have seen a green candle today. Nonetheless, this is what we are looking at. Now, we went long yesterday, roughly in this area. As I said, market is currently at 1333.50. We definitely can see we've got this rounded bottom A. Secondly, in terms of that support level, we had a bounce from this area of about 1315, which comes to a 50% retracement. My sense right now is if we look at this as our 2, and then this is our wave 3, this wave 3 is composed of a 1 of 3, 2 of 3, 3 of 3. I believe now we've completed 4 of 3, and we now are in this final fifth wave in this 3 count, the sub count behind that. Now, that being said, we have already taken a serious look at what our upside target is, and should this market really take off, we talked about different areas. 46 is the first one. We have another area really here, and then at 77. Of course, we'd have to compress this chart to see more of the studies, and this goes up to a 1-to-1. 1-to-1 takes us well above 1400. But let's accomplish, before we get to there, let's see it break, of course, these most recent tops, which is what I am looking at as our biggest level of resistance that we might have to face, and that sits at around 1377. So traders, lastly, in terms of the current trade that we're in, we do have stops below 1305. As I said yesterday, what I'm trying to account for are these series of lows right in here. We want to make sure that they, of course, don't get hit. I want to also finalize the show by taking a look at the big picture. And the big picture really is the fact that as recently as the end of last year, December, beginning of this year, we completed, I believe, a major A meaning that 3 years of dramatic downside moves in the market. From there, we have had quite a constructive year because we've seen this market go from about 1050 up to 1370. That's quite a move. Now, the other thing that we want to consider is on our wave count, and I draw your attention to this wave 1. I've put in a scalable line which will give us the distance, and again we now have the beginning of wave 3 back in place because we believe that we concluded our wave 2 here. And as you can see, if we simply have wave 1, wave 3 be equal, and again, wave 3 should not, or cannot, I should say, be the shortest of any of the impulse waves, we are still looking at about 1445. The only thing that's missing from this model itself is a time element, because Elliott wave simply doesn't put time into that series of equations. But nonetheless, this to me is an extremely optimistic viewpoint in terms of where we believe our current models have shown us that the price of gold will go probably over the next 2 to 3 months. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.